Hi, everybody. Welcome to Friday's Focus on Finances. My name is Jamie Fleming, and today we're going to be talking about the 5 financial lessons for small business owners. And we do have individuals and business owners as clients, so I wanted to bring this to the forefront for those of you who may be deciding to start a business, those already in business, or maybe even some of you who have started a side hustle, which is pretty popular these days. Because the truth of the matter is, a lot of people dream about starting a business. Becoming a successful entrepreneur has replaced home ownership as the new definition of the American dream for some people, especially thanks to the made for Hollywood stories like Steve Jobs and Mark Zuckerberg of Apple and Facebook. But while Jobs and Zuckerberg have become household names, fame ought to be the least of the attractions to owning your own business. Probably more compelling to tens of thousands of individuals starting a small business every year is actually the allure of being master of one's own professional success. So what are some of the risks of going out on your own or even being in business now? Being the boss can be exhilarating, but there are also significant risks to going out on your own. Unfortunately, the failure rate of small businesses is extremely high. So the keys to success lie in a few elements, right? Like proper budgeting, determining the right product or service for your market or audience, marketing that product or service, and then selling it at the right volume or the right price. Thanks, Amanda, for popping on and saying hello. So what small business owners sometimes forget is that they need to adapt their own individual financial plans for the new realities and risks of being a business owner. So when we look at financial planning, holistic financial planning for an individual or couple generally involves tax planning, risk management, investment planning, retirement planning, and gift and estate planning. For each of these areas, we're going to look today at how business ownership takes this planning to a whole nother level. So let's look at tax planning first. This is something we do effectively with our business clients throughout the year. And we do this because the Tax Cut and Jobs Act changed the tax treatment of various legal structures businesses use significantly. Business income that passes through to an individual from a pass-through entity or sole proprietorship is actually taxed at individual tax rates. To the extent that individuals and businesses have different marginal rates at different brackets of income, it's actually possible to coordinate the taxation of business and personal income in a way that provides the greatest benefit to both the business and its owner. And this can be done quite effectively with different retirement plans that are available to business owners versus the salaried employee. And it's actually a really efficient way to transfer business equity to grow your personal wealth. So we do this quite often with our business clients. The most effective way we do this is we check in quarterly with our business clients to make sure that we're looking at cash flow and we're planning effectively to fund all the retirement plans for the business owner themselves. And if they have employees, give education there. So tax planning is something that I see very few business owners doing when they come to see us for the first time. Most people engage in tax preparation, meaning you give all your stuff to your CPA before March 15th if you're a corporation or a business, before April 15th for an individual, but there's very few things that a tax preparer can do for you for the prior year. So for a business, it's really important to look at all the advantages that you can put into place and do that throughout the year so you can make the most benefit of them, both on the business and the individual side. Risk management, if people have listened to me talk before, for the individual includes things like early death, disability, illness, or even loss related to property ownership. But once an individual owns a business, the risks multiply to include interruption of the business due to a disaster or pandemic, death or disability of a person key to the success of the business. There can be a loss of business property and even lawsuits, unfortunately, resulting from negligence or even just a defective product. This last risk can be addressed in part by the legal structure of your business, but the others require specialized insurance coverages over and beyond what the owner holds for himself or his or her family. So if the business has employees, then there's workers' compensation coverage as well that's necessary. But the business owner, as far as those additional risks, what I see in my experience is that a lot of business owners are either underinsured in some areas or not insured at all for certain types of losses. And Amanda popped on today. She's one of my go-to people for commercial insurances. If you are a business owner, you should be having your insurances reviewed every single year to make sure that what you're doing in your business is covered and has this risk management umbrella protecting you, and not just protecting you and your business, but protecting you, your business, and your family. Because when you grow and you become more and more successful, these structures are even more important because, frankly, we talk about this all the time. There's one thing to grow and accumulate your wealth, and then the other part of it, as you do accumulate your wealth, protecting that wealth. Unfortunately, we live in a pretty litigious society, especially if you're in California, but just about anywhere, I think. And we talk about this all the time in our networking groups for businesses, is that no one wants to pay for insurance coverages. Honestly, it's one of those expenses we hate to write the check out for. But if there's one loss, then it's the cheapest expense or cheapest coverage you'll ever own. And we talk about this all the time with our business clients. I always recommend that you have these coverages reviewed. I just had my coverages reviewed, and I thought that I was fully covered because I review them every year. But I had a second set of eyes look at those coverages, and sure enough, I had one piece that I was missing. Now I got that into place, and things are covered, and I feel much better. And also, if you're on and you see some of the comments, Amanda, who I spoke to about commercial insurance, also buy-sell agreements. This is one of the areas that is very underutilized in businesses. And unfortunately, people realize that they're not structured properly when something happens, of course. That's when you don't want to find out that you don't have the right things in place. So it doesn't cost you anything to have things reviewed. That's the thing also. And people always think they have plenty of time. Next thing they know, a whole year's gone by. So reach out to people that you know. I also have ways to refer people to assess these areas that I don't cover. I do risk management on the personal side. So when we're talking about a business owner, are they covered for disability? Are their families covered? If something were to happen and they should pass away prematurely, what are all the areas that need to go in place, including disability, life, long-term care? So that's insurance on the person. But then you have to have and look at the other coverages that a business absolutely must put into place just for protection purposes. It's one of those things that you never want to use, but if you need it and don't have it, then it could be the end of your business that you've worked so hard for. So risk management, as you can tell, pretty important area. It's why I spend a lot of time on it with my business owners and my individual clients. The other area is retirement planning, and it's not uncommon for business owners to assume that they'll never retire. They'll say all the time, I love what I do, right? After all, if you're doing what you love, why not continue to do it indefinitely? Alternatively, they may see the business as the only retirement plan necessary, as a source of capital that will fund their retirement needs later on. But thinking along these lines is generally a really big mistake. If anything, a business owner may need more retirement planning rather than less to prepare for the time when he or she no longer can or wishes to work. So some of these things are not in our control. Some businesses completely went under during the pandemic, and it had nothing to do with being a good business owner, had nothing to do with having a good product, simply something out of your control. So these are cases where the business may not fully provide for the business owner's financial needs later on. The good news is that business ownership affords all sorts of tax advantaged ways to save for retirement, like we just discussed, and the ability to put aside amounts considerably larger than what is permissible by non-business owners. And this is a really important point to bring up, because many times a business owner is focusing so much on growing the business and becoming successful that they forget that they haven't put monies away. I'm working with a business owner right now that has just been doing, the work in the business and hasn't been putting money away for 15 years. So now with these retirement plans that we've just put in place, that business owner is able to basically catch up in ways that he wouldn't be able to if we just had a traditional 401k to offer him. So there are ways to figure this out if you haven't quite put things into place, but don't let too much time go by. And then just investment planning in general. Most small businesses are self-financed by their owners, which results in the business becoming the owner's major or only investment. Even when the owner has extra capital to make other investments, he or she still may prefer to put the money back into the business, where the owner may feel there's more control over his or her returns. However, if we talk about prudent planning, there must be focus on diversification, right? You have to have different asset classes and investments that have to be carefully selected for business owners' personal portfolio, because this may need to offset all the concentrated risk he or she is taking with the business. This is a really common mistake that business owners make. And the reality is, we talk about lack of diversification as being one of the 8 biggest mistakes even wealthy, successful business owners make. And again, there can be something that's totally out of our control, like a year-long pandemic, that may take someone out of their business because of the restrictions that are put on them. So I have a lot of business owners that were temporarily put out of work because of being in a restrictive tier and not able to open their doors. So this has nothing to do with your ability to be a successful business owner, could have everything to do with life in general being out of our control sometimes. I also tell the story of one of my first referrals in the business, who was a successful doctor who came in and literally looked like $1 million and wanted to retire in a couple of years. Unfortunately, she didn't do any of the retirement investment planning we just spoke about. She was paying herself well, about $250,000 a year, and this is 25 years ago, and also, but had the lifestyle to match, right? Meaning she had an expensive but leased vehicle, large mortgage, and even some debt. But if she actually stopped working, then the $250,000 a year would stop coming in as well, and she had very little in outside investments and retirement. And she certainly didn't have enough to provide 250,000 of income. Matter of fact, if memory serves me correct, she didn't even have enough of her investments to provide about 50,000 of income. So she would not be able to sustain her lifestyle because she wasn't putting monies away and transferring wealth from her business to her personal side. So this is a really important area I talk to business owners about all the time. And the reality is part of the problem isn't even the fact that they don't know they should be doing it. Most business owners know they need to be putting monies aside, but the reality is, and one of the reasons why I like working with small business owners, and I say small, it could be from a 1-person business all the way to 100 business with 100 employees. So we have that spectrum within our client base. But the reality is that most business owners are just super busy and don't have time, or are too tired by the time they get home to take care of all the little pieces to make their business even stronger, and even more so make their personal financial situation stronger. So that's one of the reasons why I'm passionate about working with business owners. I'm one myself, so clearly I'm drawn to that, and I see the need for that, because most business owners are some of the busiest people I know, and if you have a family on top of that, it makes it really difficult to allocate all the time to focus on your financial piece. The last area, or the last of the 5 lessons, is the area of estate planning. If a small business grows and becomes a valuable asset, now simple wills and family trusts set up for the personal side may no longer suffice for the transfer of the business. So more sophisticated financial planning techniques will be necessary to ensure business continuity after death, reduce any estate taxes assessed for the business, and provide liquidity to heirs to pay those taxes. Reorganization of the business actually might be advisable to create different types of ownership for family members and to make full use of an IRS sanctioned discount in valuing the business for purposes of gift and estate planning or gift and estate taxes. So insurance trusts and charitable trusts can also play an important role in the efficient transfer of a small business, as well as the buy-sell agreement. So buy-sell agreement has 2 pieces. There's a contract of the buy-sell, which I see a lot of that are unfunded. So part of the buy-sell agreement, much of the time, also includes a life insurance component. So many times people don't realize if you're in a partnership in a business and one of the partner passes away, and the proper documentation isn't put in place, then the surviving partner can end up being business owners with the deceased business partner's family. And most of the time, the family probably doesn't want to be in the business. And frankly, the surviving partner probably doesn't want to go into business with the deceased partner's family. So you can see where things can get awful messy if you're not putting those structures into place. One point should be clear when it comes to financial planning for small business owners. The do-it-yourself drive that helped you start your business probably won't serve you well when it comes to managing the financial issues created by the business. This is where professional expertise often becomes critical and necessary. This is where you also want to exercise your privilege of being a CEO of your business. Delegate these issues to qualified tax and financial planning professionals. The advice that you get can make all the difference in improving your chances of business success, as well as giving you peace of mind that your family's finances are secure so that you can focus on growing your business. So those are the 5 areas of financial planning that you need as an individual, but also can be applied to your business. But there's also cost to being your own boss, right? And we're going to look at just 3 of those today to make sure that you're covering all the bases, because everyone has a different story to explain what led them to become their own boss. Some were just tired of working office hours, driving long distances for commuting, or doing the actual job itself. Other people like me want a chance to magnify the positive impact of our profession in the ways we saw fit and making our own rules in that area. But whatever your reason, I salute you. If you are considering joining us and becoming your own boss, you want to consider 3 big costs you'll likely incur, and we'll also give you some ideas to overcome those. So the first and the biggest one, and one that comes up for a lot of people who are thinking about starting their own business, is the cost of not having a steady salary with paid benefits, right? So as CFP professionals, we always advise our clients to save for rainy days. When you're prepared for the low points, you increase your probability of success when you do this. The absence of steady salary and paid benefits forces a discipline of saving before spending. Unlike a steady job where you get steady paycheck, you can save for retirement first and then spend what's ever left. As an entrepreneur, you actually have to save for cash flow for your business and then save for retirement. So usually the cash flow piece takes the main focus, but we always want to implement the habit of saving for retirement as a business owner. But initially, having about 6 months of core living expenses will allow you to focus on growth versus survival. It's amazing the shift that happens when I work with business owners and they have that 6 to 12 months of emergency reserves. And this is so empowering because it won't matter if you have a slightly bad month or if your income is not steady every single month. My realtors, for example, they'll have a windfall in 1 month and then maybe not see anything for 3 months. And there's this feast and famine where when we work with them and we work on cash flow analysis, we can map out for most professionals what it can look like. So saying you reap what you sow makes more sense now, right? You want to make sure that everything that you're doing is put in place in a way that you just have the ability to focus on your business and not worry about having a bad month or a bad couple of months. So the number one reason businesses do fail is cash flow. So with these facts in mind, you can plan smarter and maintain discipline to make sure that you're covered. The cost of not having a paid office or a team. So I've always had an outside office for my business. I never wanted to have an office in my home because I always wanted to kind of shut the office door, come home, and then be with my family. The pandemic has reminded me why I appreciate my outside office. We know as entrepreneurs, time becomes our most precious commodity. It's something that we might take for granted as salary earner, right? So again, we have to look at things a little differently. Our outflows of time and money must be focused on a return on investment, right? And so here are some of the ideas to help you keep your outflows in line with your inflows. And one of those areas is to choose office space that allows you to concentrate with few interruptions. So right now, I'm going back and forth to my office within the week, but when the pandemic started and my kids were here in school, doing school from home, then it showed me, it really made me appreciate having uninterrupted time slots within my day to get my work done. When you have interruptions coming constantly, you get out of that mode, you get out of your work mode. And what I know for myself, at least, is that I definitely wasn't as efficient than if I were in my office for 4 hours. I could get done more in 3 to 4 hours in my office than I could over a couple of days of getting interrupted throughout the day. And then you can also consider shared office space at the beginning to lower cost as well. But to have that space will really help your efficiency when it comes to running your business. Another area that's really important is to take monthly inventory of where you allocate your time weekly and consider hiring people, freelance professionals, to do the tasks that take the most time and generate the least amount of income. This was something that was helpful in my business to have someone come in and say, would you pay someone your hourly cost to do that job? So in other words, if you are wanting to charge $250 an hour and you're filing, would you pay someone $250 to file? Probably not. So why not pay someone, you can pay someone minimum wage to do that job, and then you can do the jobs that can earn you the $200 or $250 an hour. So these time consuming tasks really add up, and those things become more and more time consuming the bigger you grow because there's just more to do. So consider hiring someone to do those tasks that take up a lot of time but do not require your skill set to do. This is where professionals can also help you make these moves, right? Because an example of this is that a few years ago, I was doing my own bookkeeping. I'm in finance, so it kind of made sense. But my CPA just out of the blue said, why are you doing this? You need to be doing more financial planning and being in front of your clients more. We can take that off your plate for this amount a month. And it was the best dollars that I ever spent. So it wasn't that I couldn't do the job. It's that that job took me several hours a month of just basically data input, right? And making sure things are reconciled. And now someone else does that and literally freed up 3 to 5 hours every single month for myself to do all the things that I should be focused on. So here's the second reason businesses fail, and the reason why I bring that up is that entrepreneurs typically have the I can do it all mentality. But the key here is we talked about time and money as resource. You only have so much time in the day. And so the key here is outsource whenever possible. It will help you grow your business as you can bring on layers of people to do those time-consuming things. And then the cost of not having a boss. So accountability should become your best friend, but being accountable to yourself is harder than it seems. And as your own boss, you can't get fired or restructured from your business. So how do you keep yourself on track? And how do you make sure your skills keep up with the market's needs? These are all things that you have to consider in your business. So one of the things you can do is ask your clients for feedback. It's one of the best ways to improve your business is asking what your clients need. My business started from me being a straight stockbroker and referring out financial planning to other CFPs. And finally, my clients were coming back and saying, we like that person, but you already know everything about us. Can't you do this for us? So I went through the process many years ago, I believe in 2002, 2001 or 2002, to get my certified financial planning designation. And that was really a wonderful experience because that was client driven. And then what it also did for me is realizing that I could be helping my clients even more because I had now new expertise in all the areas that we're talking about today of tax planning, retirement planning, investment planning, estate planning, developing efficient spending plans. All these areas came out of me getting my CFP designation. And that allowed me to see all the other gaps that were actually in my client's financial picture. So it was really helpful to do that. And focus your resources to review your strategic plan monthly. Right? It may cost you money to hire a business coach who will hold you accountable, but if you choose someone who has success and experience in building successful businesses, that investment will be the most worthwhile for you because as business owners, we tend to have pretty big blind spots to some areas. I started using business coaches in my 20s before I even thought I could quote unquote afford one. My strength was always in investing and developing plans, not marketing and business structure. So I hired people to do that early on to give myself a better chance of success because frankly, when I started in the industry, and statistic is still true today, we were told that 80% of people coming in don't make it past the third year. And so that was motivating enough for me to say, okay, well, I'm going to do what only 20% of the people are doing in my industry, and I'm going to hire a coach. And it was the best thing that I did. And I still have business coaches today because you want to continue to grow as a person, as a business owner. And sometimes the only way to do that is to utilize people that are already there, already at the place that you want to achieve, and hire them on as a coach and see what they're doing in addition to what you've laid the groundwork for. The other area to implement in your business is to join a peer group or networking group. And also, whenever possible, take a leadership role because this will put you out in front of people more often. It'll get you better at explaining your business, and you'll have support built into these groups, which is nice. And then you want to invest in services and products that will help you grow your business and your skills. This is important because putting systems in place can help automate some of the essential tasks that you need to do but are time consuming, and this will allow you to focus more on serving your audience. So anytime you can put small things into place this way to take that burden off, then you're going to be able to grow that much easier. So there are many more costs associated with being your own boss. Planning for all of them, including losing your steady cash flow, office, and team will greatly increase your odds of success. I know the businesses, the owners that I work with, even though some of them were delayed and affected by the pandemic, they have all been able to maintain a healthy financial existence because they have this planning in place. So whether they were out for 3 months or 6 months, or even one client that was out for 12 months, basically the whole time we've been in the pandemic, they've rearranged how they've done things, but financially they weren't stressed because they had their 12 months of cash flow set aside for them. As a CFP professional, these are some of the ways that I can help you think through the implications of becoming your own boss and ensure that your values are in align with your financial realities. If you're already in business, make sure you've implemented the items discussed today. And of course, always ask for help. I hope you enjoyed today's focus on finances. We will see you next week. Have a wonderful weekend.